the gap trading. I remember last 2 weeks we traded gap, and then a lot of people were like, they don't know how to trade the gap, even though I drop a signal that let's buy this because of the gap. Most of you are confused about gap trading. So if you really want to know what gap trading is, then you have to be focused from here. So a gap is an area on the market or on the chart where the price of a currency pair moves sharply up or down with little or no trading in between. And this can be as a result of what? Fundamental. This can be as a result of fundamental. So let me just give you an example. So usually what happens is that whenever currency pair is moving down, we are expecting the next one that will come should also move down in that pattern like that. Right? But the moment there is break in the continuity of the chart, this area is being referred to as what? The gap. The gap. Or when our market is trending down, suddenly trending up like this, then suddenly breaks or goes higher than usual, leave an area. So this area in between these two candlesticks is known as what? The gap. So whenever you see something like this, they are called gaps in the market. So as forex traders, we take advantage of them and then make money. We take advantage of those gaps and then make money. Now, this is what we mean by the gap. You realize that when market was moving down, up, suddenly it moved from here to here. So this area is known as what? The gap. Whenever you see market created this gap here, we forex traders take advantage and then trade them. Now, how do you trade it? That is the big question. How do you trade it? We have two different ways of trading gap. We have two different ways of trading gap. So stay focused from here. Now, the first method is that whenever there is a break in the continuity of the chart, and market should drop suddenly, creating a gap like this, it is always believed that market will definitely come back to fill at least halfway of the gap before dropping. Take note of it. Forex traders believe that whenever market creates a gap like this, it is always believed that market will come back to close that gap at least halfway before dropping. So once you know it, you have it at the back of your mind that anytime gap is being created, usually market try to close it. So when market is going back to close that gap, as a forex trader who have this idea, what do? You either buy or sell just to close it. Now, because you are closing a gap, meaning that this is not a strategy. So you have to be extra careful when trading gap. You don't target so much, and you don't also risk so much. It is certain that whenever gap is created in the market will definitely close at least halfway of it. So to my own understanding, what I usually do is that when I see a gap in the market, I don't buy like this. For instance, this is a gap. So I'm expecting market to turn up like this to close this gap, either halfway or full. So immediately the market starts trending up, I will buy. Now, I don't pick more than 20 pips in the market. Trust me, because I don't know whether market after hitting the halfway, it will bounce back, or after hitting 70%, it will go up, or after hitting 80%, it will definitely drop. No. So to be on the safer side, what I always target is the first half. So if this is the total gap, I can target maybe the first half. And this first half can be at least about 20 to 30 pips. So if it is more than 20 pips, I still target 20 pips, and then I'm out of the market. But I am very sure that this market will definitely close at least some part of the gap. So that is how we trade gap. So if you realize, when this market created the gap last 2 weeks, this was the gap. When market created that gap, I told you all that let's fill the gap. Those who know how to fill it. So when market open, I think I'm running out of time. So when market open like this, let me move on to the 5-minute time frame so you can see. So this was exactly how market opened. This was exactly how market opened. So immediately, I think Sunday, around 9 p.m. GMT, market opened. So quickly, there was a gap on Euro USD because of the recent news. So there were a lot of demand on US dollar because it is a safe haven currency. So even though it was weekends, but the other financial institutions were taking trade on US dollar. So what we do is that because of this formation we know that definitely market is going to cover at least half of this. So as a retail trader who wants to take advantage of the gap, what do? You buy. You buy here. You can buy here and target halfway of the gap. Over here, you won't get that your 1:3 risk-to-reward ratio, trust me. But you are very sure that this market will definitely fill the gap at least halfway. Don't target the full. Always target half. Once you target half, at least you are safe. So you see exactly how market plays out on that asset. So that is it for the Euro USD. So I think the same thing happens on Euro JPY and then gold. Let me check Euro JPY. JPY is also another safe haven currency. So the same thing happened on Euro JPY. So I think we move on to the charts. Okay, so you see on the Euro JPY, the same thing happened. Market gap here. You see how it fell. It felt it. Let me move on to the oil to see something. So crude oil. So when you check on the crude oil market, you see the same thing. So this is where I was trying to explain to you. See, when market gave up here, it couldn't fill the whole thing. It just filled halfway of the gap. You see, that is. So it felt half. If you were targeting market to fill everything, market will just leave you around here and then boom, you're out. So always target at least half. You see here, when market went up, it closed almost all the gap. So that is it. So that is it for gap trading. So another way to also trade gap is that you wait patiently. After the gap formation, after this gap formation, you draw a zone at the origin of the gap.
That is what I know.
At the origin of the gap, and wait patiently for the market to fill the gap. Once it fills the gap, you have it at the back of your mind that this market will continue. So when it is continuing, you just enter and then make money. So that is the two way you can trade gap. So let me just give you that of the Euro JPY. See, the same thing happens. So this is so Euro JPY. Okay, so Euro JPY. So the first method is by trading the retracement, which is filling the gap, and the second one is by drawing a zone at the origin of the gap. So even though here Euro USD couldn't what hit that area for you to buy. So you ignore, you only take the first one. When you move on to the gold, let me see gold, that of gold. I think I saw something like that on gold. You see, the same thing happens on gold. You see, market gave up, came back exactly at the origin of the move. So if you had wanted to trade the gap, the second method of trading gap, after this market came back, once it tapped onto that zone, you can confidently enter and make money. You see here, over here, market created a gap. So the first method is by what? Trading the retracement. When market is falling, you also sell for market to fill at least half of the gap, or you wait patiently and create a zone. When market comes back and hit that zone, you can what? Buy confidently and make money. So that is it about the gap trading, and then what? The safe haven currencies. If you have any question, let's ask them before my time. So you can unmute yourself and then